Good morning, it's Harvey Jackson. Just going to get into a few different news things. China summit is over, and so far with the announcements, the market is not getting excited about any of the egg trade there. Slow planting in Saskatchewan as well. So we've got a busy slide here, trying to put everything onto one. I guess maybe that's the stuff I shouldn't do, but you can see here, this area here. Basically, south versus north here. There's planting pace that's been going on, and you can see the southeast, southwest, 24, 34%, west central, 13%, and how it's drawn up in here is maybe a little bit. There's no borders for how it's listed here, but 16% provincially, and then you look at what does that mean in the 5-year and 10-year? Well, the 5 and 10-year are at this time of year usually at 28%, so we're 10% behind pace, minimum 12%. And you can see just exactly what crops. You can see canola is only at 7%, spring wheat's at 14, durum's at 29 because south versus north. Yeah. And then the other thing that I do pay attention to is the topsoil moisture. As we get started, you can see the yellowhead corridor, basically, or I'm going to say the northeast anyway, is quite wet. But you can see that there's adequate in most areas. They're short in 16% and very short in 1% on average. Trump-Xi met, and there's few wins that can be talked about here. Boeing shares slump after orders missed expectations. Xi issues stark warning on Taiwan in closed-door talks. U.S. expects double-digit billions in Chinese farm purchases from Trump-Xi summit, says Greer, but nothing to substantiate it. This is just the article that he got quoted. He noted that 25 million metric tons per year deal agreed last October, and said that the U.S. also expects to see an agreement on double-digit billion purchases of eggs over the next 3 years per year coming out of this visit. And this is more general than aggregate, not just soybeans, but everything else. China will buy a lot of farm products, is Trump's explanation. Traders are closely watching for any reduction in soybean tariffs, which would allow private Chinese crushers to resume purchases of U.S. soybeans after being effectively sidelined from last year's U.S. harvest by steep duties. At the time, state crop traders were the only active buyers, so Synovus and anyway, here's I thought this was interesting as well, is just the slowdown of China purchases altogether. So China grain imports have peaked, no longer a growth engine for the world grain trade since 2024, and that came from Ag Resource. Uh, uh, and again, this is what was communicated to the news wires. Now, there's no documentation saying President Xi said this as well. Like, there's not that I can see. Kansas wheat tour at 3-year low after drought. Quick look at the weather. You can see that there's some precipitation forecasted, so there's divided rains and heavy, so that might slow down some of the planting, but it's still at a great pace here. You can see that there's active weather in Saskatchewan rolling into Manitoba with very high winds. There's a lot of damage going on. I'll show you that in a second here too. You can see May 16th, Saturday, there's going to be some snow in the north there. And then as you move on, you can see Wednesday, it starts to build snow in northern Ontario. Here's some of the winds. You can see that it's pretty strong. The southern Saskatchewan, Manitoba, and northern plains U.S. there as well. Just a quick note that there is going to be a NOPA crush report, and a lot of that numbers are already known, but we'll have to see what the inventory numbers come out at for the soybean oil and meal. I think we're going to see record crashes every month, but just a quick look at the market here. Canola is basically trading sideways with slight up and down depending on when you take the snapshot, but November canola trading at $747. Soybean oil is slightly up at $73.95, just shy of 74 cents. Crude oil is up $3.50 at 104. Diesel fuel is up 12 cents at 403 a gallon. Soybeans down again, 440. It had a bad day there yesterday. Spring wheat basically trading sideways right at the $7 mark on the July contract. And the other wheats are down 4 and 2. Corn is down a penny and a quarter, and the Canadian dollar is down below the 73-cent mark. Just a quick look here. You can see that we're getting up to the 62, 68, 61.8 retracement value. So that is usually a critical point if it's going to bounce. But if it trades through there, we'll see if any of those other retracements will hold. But we are up against the 50-day moving average and traded through it yesterday. See if we can continue to do that. And it's still slow stochastics is still saying it's a sell here. Same thing on the November contract, but a tighter range here as well. Still a sell, of course. Repeat. Um, it does look like it's kind of narrowing in, going down, and it is up against some of those short-term moving averages, nowhere close to the 50. Soybeans have been trading sideways and below the 10-day moving average, up against the 20-day. Soybean futures on the July back into this channel that I've been have drawn up for quite some time here. And if you look at the crude oil, basically getting caught between some of these the 50-day moving average or the 100-day moving average and the 20-day moving average as well. Here's your diesel fuel futures, still worried about it breaking out here. Gasoline, same thing. We'll have to see how this war progresses here. So quick look at the Canadian dollar. It's up against that 61.8 retracement value as well. We'll see if it trades through there. And if it does, you got a shot at getting back down to 71 cents 8. US dollar index going the opposite direction. Copper pulled back the last couple of days, but it did make its high. Quick look at wheat. Nice jump that we had a few days ago, and it's pulling back down to the 10-day moving average here now. So what I did here is just use the previous slide and then just looked at the July priced in Canadian dollars. So 9.88 is the cash price. The US dollar price is 7.20. So you got just a difference in the Canadian US. There's a $2.60 foreign exchange basis. You would still have to take out elevation, freight, margin, and what is the cash bid at those farther out, or at the exports. What would that look like? What would the actual basis is? And that's how it kind of gets calculated here. Red Spring. So your December contracts trading at 738. And if we convert that, that's, on the just difference between the CAD and the US is $2.76. So a little bit greater there. Kansas trading just at 707 above the 10-day moving average. Same thing with the Ds. Chicago above the 10-day moving average. European French wheat above all the moving averages at the moment. Corn futures. Here we are. Got to that higher level on the Ds contract, and now it's pulled back. Let's call it 12, 14 cents here. So if we were to do the exact same thing, just figuring out what the actual difference in the priced in Canadian dollars, it's around $1.79 right now.